For those of you who were in Columbus last week, I hope you had a great time. I hope we all survived PAA. I had a wonderful time myself. And I hope you're getting excited about DC for next year. For those of you who don't know what PAA is, it's like summer camp for demographers. It's a really great meeting. You should check it out. So today we have our last speaker of the semester as well. And Emma's actually finishing teaching this afternoon too. So we're at that moment of transition in the seasons of the academy, which is a wonderful thing. And Emma is now a new assistant professor of economics at Michigan. She joined us in the fall after being at the University of Washington. And Emma does work on developmental economics, which is not surprising because that's what most of our economist colleagues do in the Pop Center. Regional focus on sub-Saharan Africa. We're going to hear about the first area of research on digital financial services and the consequences of those for women's empowerment in households. But also Emma does work on anti-poverty programs like cash transfers and graduation programs and household welfare and women's empowerment in that space. But I was looking at the CV here, and the most interesting paper that jumped out at me was the one that was called Role Models in Movies, the Impact of Queen of Katwe on Students' Educational Attainment in the Review of Economics and Statistics from March, so just last month or so. And this was about a movie in Uganda about a young woman who was turned out to be extremely gifted at chess, and like the consequences of that for folks. So really an interesting portfolio, Dr. Riley, and I'm really excited that you're here speaking with us today with one of your frequent co-authors on this project. So thanks so much for coming.
Thank you. Thank you so much for having me. I'm really delighted to be finishing off the semester. So thank you everyone for coming this afternoon. So as Sarah mentioned, I'm going to be talking about digital financial services and women's empowerment, and specifically an experimental study from Tanzania. So to motivate this research, women's empowerment is a frequent goal of policymakers, and it's important not only as a goal in its own right, but also because women's empowerment has been shown to have important effects on other economic outcomes and economic development in general. And one dimension that matters for women's empowerment is women's ability to enact their preferences within the household, for which their ability to control their own money and finances is an important determinant. And so digital financial services generated a lot of excitement because of their potential for increasing women's ability to control their own funds and keep their money private and secure. But despite rapid growth and adoption in digital financial services sort of worldwide, there's actually large and persistent gender gaps in women's use of these services. So for example, in sub-Saharan Africa, mobile money services are kind of one of the most widespread form of digital financial services that enable you to send, receive, and store money on a basic mobile phone. But in sub-Saharan Africa, only just over a third of women actually use mobile money services compared to half of men. Women are less likely to use mobile money, they use it less often, they make fewer different kinds of transactions using mobile money, and they make smaller value transactions. And importantly, only about a third of women save with mobile money compared to 60% of men. So if digital financial services kind of have this potential as a tool for giving women more control over their money, it's concerning that there are these large gender gaps in their use. So in this study, we're going to be looking at whether increasing women's use of digital financial services, in this case mobile money services, can actually increase their control over their own finances, raise their empowerment, and improve other outcomes for women. And in order to do this, we use a randomized control trial with 150 female microfinance groups in Tanzania. And we exogenously shift their weekly loan repayments from the usual method of making the loan repayment as cash, and instead to shift that loan repayment to be made using mobile money. We consider this to be quite a large increase in women's use of mobile money services, because they're making these loan repayments every single week, and they're quite large value. They're repaying sort of on average about $20 a week, and that's about equal to the value of transactions women were making with mobile money services every month prior to the start of this study. We're not changing anything else about the microfinance loan disbursement process or changing the requirement for women to meet in person every week in that group meeting. And then we're going to be looking at the impacts of this shift on women's use of mobile money services, women's empowerment, and other outcomes for the woman and the household, like her business and household consumption, after 9 months. So to give you a brief preview of the findings, we find that treated women, so women whose microfinance groups shifted to repayment using mobile money, see large increases in their use of mobile money services. So all of the increase in use of mobile money is sort of not mechanical, it's excluding anything related to actually making the loan repayment. So this is beyond that, women conduct much larger value transactions and they save more with mobile money, they use it more frequently. And in particular, women are more comfortable using mobile money. And we think importantly to women's control over funds, they're more likely to make transactions using mobile money by themselves. We see that treated women have an increase in their empowerment. This is driven by an increase in their financial control, which we measured in a variety of ways using both self-reported measures of the woman's perceived control over her finances and also experimental measures. Women save more in all forms, but particularly as mobile money, and they report making more decisions in the household, which is how we usually measure sort of women's empowerment in this space. And consistent with this, we see that expenditure shares in the household shift to be more aligned with areas that women express a preference for. So we see expenditure shares becoming more aligned with women's preferences. And importantly, there's no evidence of backlash. We don't see any evidence of increased discord with the husband as a result of the woman sort of having more financial control and higher levels of empowerment. We see no effects on women's businesses, household income, or total consumption. None of these change at all. And interestingly, we do see improvements in social cohesion within these microfinance groups, which we think is driven by a reduction in sort of meeting time spent just counting cash, which was actually a big component of meeting time prior to the shift to mobile money loan repayment, which then meant there was more time at group meetings for sort of discussion about the women's businesses and other forms of social interaction. And importantly, for the sustainability of this as an intervention that the microfinance organization can continue with, we saw no changes in other loan repayment behavior. So women are no more likely to miss loan repayments from treated groups, are no more likely to be late with loan repayments, and that as likely to continue taking subsequent loans. So we think that this study makes 3 important contributions to the literature. The first one is that we're the first study showing that increasing women's use of digital financial services can increase their control over their money, and through this increase their ability to enact their preferences in the household, and so raise their empowerment. So while prior studies have sort of highlighted control over funds as a potentially important dimension of women's ability to enact their preferences within the household, prior studies have always had sort of confounders in the sense that the relative share of men's and women's income in the household was changing, or just total household resources were changing as a result of these interventions. In our study, that's not the case. We're really just isolating sort of control over funds and how that then affects the bargaining process. Secondly, we show that use of digital financial services can actually increase microfinance group social cohesion. This is really important because a lot of the mechanism through which microfinance groups are able to maintain very low default rates and be a successful way of lending to the poor in developing countries is because they have strong social cohesion in the groups. And there was a concern that introducing digital financial services into the repayment structure could negatively affect social cohesion. We do not see that, and if anything, we see the opposite. Lastly, we show that use of digital financial services can increase formal savings. While other studies have tried to look at encouraging people to save using digital financial services, normally they've had to either alleviate transaction costs or provide quite strong interest rates to get people to save on the accounts. We showed that actually maybe just increased experience that you gain through conducting repeated transactions using digital financial services can be enough to encourage and facilitate saving. Yes, Dean.
Wondering if you could connect what you're doing here to your other paper, your famous AER paper. I mean, there's a lot of, so it helped me, I guess, a lot of people, see you present that here too, sort of like help us figure out to differentiate. And it does seem to me that that paper has some different business.
Yes, exactly. So the paper that Dean's referring to, for those of you who, probably most of you aren't aware of it, I have a prior study that looked at the impact of dispersing microfinance loans with mobile money. And I find that women who receive their microfinance loan on a mobile money account invest a lot more of that loan in their business and subsequently have higher business profits as a result. I see that paper as very different to this one because firstly, there was no change in financial control in that paper. The main mechanism is through increasing women's ability to actually invest the loan at the start of the loan cycle in the business. That resulted in improvements in business outcomes, and then that's feeding through into improvements in women's empowerment, more through this classic channel of increased income generation. So it's a very different mechanism to what we're saying is happening in this paper, which is where there's no change in sort of women's income generation. We just changed sort of funds that previously she was holding as cash. And so she was having to bargain with her spouse over how those funds were used. We're shifting those onto a digital account, which now the woman gets to decide how those funds are used. So basically increasing her ability to decide how funds are used, rather than entering through a bargaining process over it. And so through that mechanism, increasing her ability to enact her preferences in the household and her own house.
So this study is about channeling repayments through digital money?
So this study is about the repayments, and it's about this kind of repeated use of digital financial services, and so habit formation and shifting money onto digital financial services. In my prior paper, there was a one-off, you got a loan on a mobile money account. Women stored the loan on that account and slowly, they drew it down over about a 1 or 2 month period, but they never deposited more money on the account. They didn't start using it more frequently. Once they drew the loan down and invested in their businesses, that was it. They never used the mobile money account again. So this has really changed kind of how women use mobile money. So now they're using it more frequently and intense. Any other questions at this point? Good. So I just very briefly, I just have one slide on the conceptual framework before I go into the study design. Just to say a little bit about how we're thinking about how these digital financial services might change women's control over their funds. So we consider this intervention as really having a very minimal, if any, effect on women's outside option, but instead affecting women's ability to enact her preferences in the household. And we think of this potentially happening through 2 ways, probably primarily the first one, but possibly also the second. So the first is privacy. And basically there's an earlier literature sort of developed by Nava Ashraf, which is basically the idea that if you can kind of conceal income or funds in the household, then that money might not necessarily even be entering a bargaining process at all, but instead it's then funds that you can just independently sort of decide how to spend and how to keep. And so the idea here is that digital financial services increase women's privacy over their money. And by doing that, they increase women's ability to decide how that money is used and what it is spent on, just because it's more concealable than cash. A second potential mechanism is transaction costs. There are costs to accessing money that's stored in a digital form that are not present when you're looking at cash. And so because of that, that might assist women in resisting claims from their spouse or other people to give them income or to share money with them. So to give a bit more background, I mentioned at the start, mobile money services are kind of the most widespread form of digital financial service in sub-Saharan Africa. So they allow money to be sent, received, and stored on a basic mobile phone. By that, I mean a non-smartphone. So you don't need internet, you don't need a smartphone, you can use sort of a very, very basic feature phone with buttons to use mobile money services. In order to sort of put money onto the mobile money account and withdraw it afterwards, you have to go to an agent. You can think of these agents as almost like human ATMs. They're generally a person in a kiosk or who has a business that offers these services, and they do the cash in and cash out for you. Mobile money agents are extremely prevalent in Tanzania. So at the time, or just before this study took place, in 2020, 85% of villages in Tanzania had at least one mobile money agent. So it's extremely good access kind of to the mobile money network in Tanzania. Yes, sir.
So you were saying before that having an app made it easier since women weren't carrying money around in their pockets, right, to resist requests for claims on those monies. Do you think having like a local human ATM means that, you know, it's like everybody knows when sort of social assistance checks come to the household and they know that that's when the money is going to be there. This is a location. People know who's using it. I was just wondering also if there was any interaction between spouses, perhaps, that a male partner or other partner would have access to the woman's phone and be interacting in those engagements. I'm just curious in terms of the human side, how much, you know, of a change there is or how people are adapting to them.
Yeah, that's a great question. So in this context, which I'll go through, I think in the next couple of slides, women have very good access to phones. They all have their own phone, which means their husband has their own phone as well, because men usually get a phone before their wives would. So these are generally dual phone households. And in terms of the mobile money agents, like, yes, every village has at least one mobile money agent, but most locations have multiple agents. So there would be a degree of choice around which agent you went to. And we did actually ask women about this quite a lot. And women usually choose agents who they recognize as kind of protecting their privacy. In particular, women are more likely to go to female agents. They wouldn't only have a choice of an agent in their village, but often where they actually have their business is kind of more in a kind of semi-town area or more commercial area, and there's very, very high density of mobile money agents there. So I think it would be unlikely in this context that there's a situation where there's just one agent, the husband and wife are sharing a phone, and that actually the husband has kind of good transparency on the woman's use of mobile money.
I mean, even if they have their own phones, right? Like people monitor their children's phones or their partner. I'm just curious as a sociologist, like the interaction part of this, and just people's tendencies, but tend to find a way around technology. So I just wondered your on-the-ground experience. Keep going.
I think it's definitely true that if the husband really wanted to find out how much money the woman had, he can definitely, you know, ask to see her phone and like demand to look at it. I mean, it has a pin that, you know, if he's going to demand to look, then he can demand her to put the pin in. And so in those sorts of extreme situations, then the mobile money account's not going to add any privacy over having cash. But I think in the slightly less extreme where husbands aren't doing that, which seems more the world that we're in here, you are going to see more privacy by having a mobile money account. Yes?
Is there, do you have a reason for why women are less likely than the men to be saving their mobile money? Does it have to do anything with like gender differences and how they're like maybe giving the household?
So these are all from national statistics, and there could be many reasons why women are less likely to save. Like some of it's just women are less likely to use mobile money, but then even amongst users, women are less likely to save, and that could be because they're poorer than men on average. They have lower like digital literacy, lower trust. Like there could be many reasons. We're not really going to be able to speak to that in this study specifically. Wait, did you have a question? Sorry.
What's the magnitude here put up there? I mean, I'm guessing if they won the megabucks, the husband would want to go look, but if it's a couple days' wages, maybe it's not worth the cost.
terms of the loan repayments, they have about like a $400 loan on average, and then they're making sort of weekly repayments over like 40 weeks plus the interest. I think on average they're paying like $15 a week through the mobile money account for the loan repayments. And then in terms of what they store on the account, when I get to the results, I'll show you that, but they're storing about $15 extra on the account compared to about 10 in the control group. So large compared to what they were doing in the control group, but they're not storing like hundreds of dollars on these accounts. Yes?
Just get some general background about women working in Tanzania, like how many women do work as a share in married couples? Are women less likely to be in labor force? And how representative are dual earner families in which they receive microfinance?
So I'll tell you more specifically about the sample we're working with. I think that partly comes through when I talk about the microfinance loans these women are getting, because all of these women are working in the sense that they have their own small enterprise. So it's not representative of sort of Tanzania as a whole, but Tanzania is one of the countries that has some of very high rates of female labour force participation, and most women who work in Tanzania do so by operating their own small enterprise. So in that sense, like these women are quite, in some sense, representative of the kind of women who work by operating small businesses, which are most of them. So we're working with this microfinance organisation called BRAC, which is the largest microfinance firm in Tanzania. They have over 200,000 clients. They only offer loans to women, and it has to be from an existing business. So all of these women already operate businesses, and the microfinance organisation verifies that business. So they're not kind of budding entrepreneurs. It's existing entrepreneurs. The loans are for $150 to $800 for 40 weeks at 25% interest, and they're all individual liability microfinance loans, which has been the case for quite a long time for BRAC microfinance loans. In order to get a loan, you must form a group with other women in your community. So that's kind of like one of the central tenets of microfinance is that they give out loans kind of in groups. So you get together with 8 to 30 women in your community, and then you apply as a group to get these individual microfinance loans. You meet in your group, in your community every single week to make loan repayments from the first week after your loan is disbursed. So repayments start immediately, and you make them every single week. It's not the case that you're repaying the loan at the end of the loan, right? You repay it on an ongoing basis, and that's kind of the basic microfinance model. Cash is, the loan is dispersed as cash at the branch, and then the status quo is that you repaid it as cash at the group meetings to a credit officer who would travel to meet your group. That just keeps the transaction costs sort of lower for the women. So the sample for this study is 152 microfinance groups from 7 branches from the Mwanza region of Tanzania, that's sort of the lake region of Tanzania. We randomly selected 5 women from these groups, so there's about 23 women on average in a group. We randomly selected 5 to be surveyed for the study and to comprise the study sample. In our sample, 97% of women had used mobile money before. So you can see this is obviously a lot higher than the national prevalence of mobile money use amongst women, which was near 50%. Most women who say they use it have used it for sending and receiving remittances, more sort of value-added services like allowing customers to pay with mobile money in their businesses. Only 20% of women do, and only 15% of women had ever saved with mobile money, so they save with mobile money. The randomization was stratified. We allocated 50 women to control and 100 women to treatment. They were stratified by some measures of sort of desire to make repayments with mobile money. And so the data that we use in this study is a baseline and end line survey, so collected by a team of enumerators 9 months apart. And then we also have administrative data from the microfinance partners. We know that every single week of the study, did the woman repay her loan and how did she make the repayment, cash or mobile money? And we know the final loan outcome, so we can see if anything else about loan repayment behavior changed in the treatment groups compared to the control group. I'm going to go over this very, very briefly, but the randomization was balanced across a range of covariants. Attrition was low, only 3%, and did not differ by treatment. The field team did an amazing job kind of finding nearly everyone in this study. I might, if I actually don't know if I have them now, just show you the balance table because it just gives a little bit more background about what these women look like. So they're 39 years old on average. Nearly all of them have completed primary school, so 92% of them have completed primary school, but relatively few, only 24% have completed secondary school, 70% of them are married, they live in households of 5 people with sort of 1 1/3 child under 12. Businesses make about $350 of profit a month. So this is a important contribution to household income. Household income is about $900 a month, so the women are contributing about 1/3 of household income from their businesses. They've been working in these businesses for 7.5 years on average. So they're, experienced entrepreneurs and not running new businesses. 95% of them have ever used mobile money before, but only 16% say with mobile money. I think that are the main things to highlight. Yes.
Can you talk about why you stratified what you did?
So I stratified by, at the group level, kind of preference for repaying loans with mobile money, because I think it's an important, I think there could be like heterogeneity by whether women wanted to repay their loan with mobile money. That could be driven by many things. It could partly be driven by empowerment, but it could also just be driven by sort of the transaction costs associated with making mobile repayments for women in those groups. So we thought that was an important dimension too.
I'm confused. I thought that the treatment assignment according to the group, the randomization.
Yeah, so it's at the group level. So we just came up with an average willingness, like an average desire to make home repayments with mobile money at the group level, and then stratified by whether the group was above or below the median.
But you also clustered at the group level, which is, that's to say that either the group, everyone, 5 in the group were assigned control or to treatment. That was the nature of my question.
So within a group, every woman's assigned to the same treatment status. The entire group's assigned to the same treatment status, and we randomly selected 5 women to be surveyed in that group.
I'll ask the question, hopefully I'll ask the question better than last time, which is, why would the group be the unit of observation to which you would assign treatment?
Oh, well, I think partly that's a logistical question, and it would have been, I think, nigh impossible to assign different women within the same group. So like some of them are now allowed to pay their loan with mobile money, and other women in the same group as you would not. That would have been nigh impossible to actually implement just from a feasibility, operational feasibility point of view. Women would have thought it was unfair. So we did it at the group level so that you kind of minimize spillovers, because the groups don't really interact with each other. Women interact heavily within a group, but they don't interact with others.
So the idea is that the subgroup would be, let's say, assigned to treatment within the group would be so advantaged by this that they would be taxed by the other group members to do the repayment. Is that the spillover you have in mind?
I think I meant more just in terms of the logistical feasibility that women would think it was unfair if one woman in the group could repay with mobile money and the other was repaying as cash. I think just trying to explain that to women in the groups, why some can do and some can't, it would just not be something that the implementing partner would be willing to do. So it's more of a practicality, I think.
I would assume the inter-class correlation is pretty high, such that comes in some sacrifice. I
don't think it was actually as high. Probably that's why we have a large number of groups, like 150, and only sampled 5 women per groups for that reason. I'd have to check what the ICCs were. I think it depends on the outcome. Things like women's empowerment is not that high within groups. Something like mobile money use might be slightly higher to check. Good. So to explain the intervention in a bit more detail, women received, I call it a training. Training might be kind of the wrong word. They basically were given the steps that they needed to carry out to make their loan repayment using mobile money. So that basically involved them being told, here is the number that you dial, here's like the information you enter, you have to enter like your customer ID and your loan ID, and then you send a repayment to this number. So they would explain the steps they needed to carry out to make loan repayments with mobile money. They were then encouraged to make all subsequent loan repayments for their current loan or any future loan they took within that microfinance group using mobile money. I should mention most women were midway through a loan, so we have a lot of variation in when exactly they were within that loan, but this also affected their subsequent loans. So the group shifted to mobile money repayment, and so any woman kind of joining that group would also make loans using mobile money, and if the woman took out more loans, she continued making their payments with mobile money. Women had to pay a 1% fee for making the loan repayment using mobile money that was explained to them, and they continued to attend weekly group meetings. We didn't change anything about the requirement to go to this physical group meeting every single week. The loan repayment had to be made in advance of the group meeting, and it literally be made like 5 minutes before it. You had to show up to the group meeting with a text message on your phone that you received when you made the loan repayment. And just to confirm, the loan disbursement process did not change at all. That was still cash at the branch. The control group continued to make loan repayments every week in their group meeting as cash. So the first sort of important outcome to look at is it was then voluntary in a sense when we were encouraged to make loan repayments with mobile money in treatment groups. They were not required to. So the first thing to look at is take-up. So we have 3 different definitions of take-up that we look at. Firstly, it's whether the woman made any payment using mobile money. We see 64% of women in treatment groups made any loan payment with mobile money. Secondly, a sort of more intensive measure, did they make at least 10 out of 22 loan repayments on average using mobile money? About 40% of treated women did. On average, they made 8 out of 22 payments with mobile money. One of the control groups did accidentally start making loan repayments with mobile money. That's why you see that 2% of the control group made any payment with mobile money. But we have a large differential between treatment and control. Yeah.
Sorry, just a context question back to the previous slide. Like, what is the purpose of the meeting if they already paid with mobile money? Is it to solve cohesion?
Yeah, so the women do a lot of other things, like there's something interesting we can also kind of discuss at the end, but they do a lot of other things at the group meetings. So they kind of like share their experiences of their business, they kind of provide help and support to each other, like in terms of advice. And actually we did focus groups with a subsample of women in the study, and we discussed kind of what was going on at the group meeting in particular. And women are very enthusiastic about the group meetings. They seem to say that it just provides them with like a forum for getting advice from other women who operate businesses in the community. And so they actually really value that part of it. And so it's definitely not the case that the meeting is only like you go, you make a payment, you leave. That's not what it looks like. It takes quite a long time while they're counting cash, and then they also do these other things at the group meetings. Yes?
You mentioned that they have to pay a 1% fee if they use mobile. Do you feel that was something that mattered? Like, how do they feel about this 1% fee if they have to use mobile?
Well, they didn't like the 1% fee. I mean, again, you know, in the focus groups and in the quantitative survey, the suggestion to get rid of the fee was like universal. So they didn't like the fee, but they also did value the kind of convenience that they perceived of making the repayment in advance with mobile money, and particularly like the time freed up then at group meetings. So I'll come back to that a little bit more later. But despite the 1% fee, we still had very high compliance. The intervention, which I think is, you know, the clearest measure that the women didn't see the fee, the cost outweighing the benefits. Yeah.
Is this the same fee they would pay on any mobile money transaction?
Mm-hmm. Yes, it's not a fee that the BRAC, the microfinance organization, is taking, and the mobile money operator takes the fee. Yeah.
I'm sorry, I'm just stupid, but so could the other control group members decide, is that what you were just saying, that they decided to switch to mobile money? Like would BRAC allow anybody to do these repayments through mobile money, or?
No, so at the time, BRAC had not rolled out mobile money repayment. What happened is that the credit officers often span treatment and control groups, and credit officers had to tell women in the treatment groups to start making repayments with mobile money. So one credit officer got confused and accidentally told a control group to start making repayments with mobile money. They had to be explicitly told how to start making that repayments with mobile money and told to start doing this by that group credit officer in order to be able to take this up.
And so the control group is not supposed to ever use mobile money?
No.
But you're looking at take up compared to folks that could never take up?
Yeah, but this is really kind of checking that the study was then implemented as planned,
Okay.
right? So this one control group did take it up, and then most of the women in the treatment group, it was optional. So it's really looking at like if women who had the option of repaying with mobile money choose to use it, particularly despite the fee. Yeah,
Maybe you're already working on this, but I think it'd be interesting to kind of see the dynamics of this or the pathway that most women are taking to see whether it's on average people are making the first eight, or if some people are trying it out and it really works, others are trying it out and dropping it after one or two.
Yeah, no, that's really, I think we can dig into that definitely a lot more with the data that we have. We see a lot of kind of going in and out. So women are making some payments, but not all payments.
You know, it'd be interesting to unpack as well, like maybe it depends on some of the financial situation or
Yeah.
their home situation.
Yeah. Okay, great. So into the results. So I just sort of have 10 minutes left.
You've got plenty of time, just keep talking.
Okay, so we're going to be doing an intention to treat because, you know, we have some non-compliance both ways, and code specification where we regress the outcome of interest on assignment at the group level to make loan repayments using mobile money, controlling for the baseline outcome, value the outcome of interest, stratification, fixed effects, and some control variables selected by Lasso. We're clustering our standard errors at the group level because that was the level of randomization, and all of the outcomes I'm showing you were pre-specified in a pre-analysis plan, including the indices, and we construct the indices using the method of Anderson at 2008. So the first outcome is mobile money use. So just to be clear that this always excludes anything mechanical about using mobile money for the loan repayment. It's kind of the use of mobile money beyond that. What I'm showing you, I don't know if this will work. In the first column, I'm showing you an index, which is constructed using the Anderson method, which is basically an index of columns 2 to 9. So giving you a summary measure of kind of aggregating all of these various components together. Did use of mobile money increase? It did by about 0.33 standard deviations. To dig into that a little bit more, we see that women in treated groups more likely to allow customers to make payments with mobile money. They're more likely to have used mobile money in the last week. The value of their transactions using mobile money is about $50 higher on a control mean of $114, almost 50% higher. Treated women are 6 percentage points more likely to save with mobile money, and they save sort of $15 more on the mobile money account compared to about $12 in the control group, so more than twice what the control group save on mobile money. So big increases in use of mobile money across all these different kinds of transactions. We then had a measure of comfort using mobile money. Again, in column 1, I have an index of columns 2 to 10, which look at various dimensions of comfort. We see sort of small improvements in most of these dimensions. Women are more comfortable leaving larger amounts of money on the mobile money account, more comfortable completing transactions themselves, reversing transactions, sending money, checking their balance, and kind of all go in the right direction. We think of particular importance is that treated women are 6 percentage points more likely to say they make transactions entirely by themselves. That's going to be very key for sort of financial control. We don't see any changes in trust or kind of problems using mobile money in the treated groups. So how does this feed through into women's empowerment? In column 1, I have a sort of aggregate measure of women's empowerment, but I think the sort of component families are more interesting. So we break women's empowerment down into these 4 different types of empowerment. The first one being financial control, the second one being the need to ask permission from your husband to do different kinds of activities, the third one being household decision making, which is often used as a measure of empowerment, and the last one being decision making in the woman's business. We see that the overall summary measure of empowerment increases 0.24 standard deviations, which is a large increase. That's really coming from 2 areas. The increase in financial control is very large, 0.37 standard deviations, and the increase in household decision making, 0.22 standard deviations. And I'll dig into both of those now. So firstly, financial control, we measured using multiple different approaches. We have 3 self-reported measures of financial control. These are just as the woman say that she decides how to spend her own income. Does she say she experiences pressure to share money with her husband? And does she discuss her income with her husband? And then we have an incentivized game, which has been used in the literature by others and by myself as well, which is basically, is the woman willing to pay to control money herself rather than have a larger amount of it go to her husband? And this is used as a measure of empowerment because we expect more empowered women to be less willing to pay to control money, i.e. not willing to give up money in order to control it. So again, in column 1, I have an index of columns 2 to 10. And we see that like all of these measures of women's financial control improve. So the woman's more likely to say she decides how to spend her income, less pressure to share money with others, more likely to be willing to discuss her income with her spouse, less willing to pay to control money. We then also see improvements in household decision making, 0.22 standard deviations on the index. This is coming from the woman being more likely to make decisions about clothing and food, and also to be more likely to say she's just involved in household decision making in column 9. Importantly, we don't see any changes in discord with the spouse, which is something that could be a concern if the woman has greater financial control and is exerting more decision making in the household, then there could potentially be backlash from the spouse. We don't see any evidence of that, at least in the form of arguments with the spouse. While we see no changes in sort of total household consumption, we do see changes in expenditure shares, which have also been used by the literature previously to kind of look at changes in women's empowerment. So this is the share of expenditure of different categories of goods, sort of food consumed at home, food consumed outside the home, etc. We see a reduction in the share of expenditure towards personal care and an increase in the share of expenditure going towards women's and children's clothing. That's quite interesting because it also was something that sort of came up in the focus groups, is this idea that in order to buy clothing you have to be able to save up money because they're lumpy expenditures and they're relatively large and infrequent for this population. And so we think that kind of aligns with the increase in saving that we saw occurring through the mobile money accounts. Yes.
So it's an increase in saving among women, but if consumption is not changing at the household level, that must be met with a decrease in savings among men, or something like that. And then I'm trying to, pair that with these results on, clothing expenditure. Like, wouldn't fathers in the household want to save up to buy clothing for their children too?
I think generally the fathers would have less preference for spending on their children than spending on other things, as been shown in other literature. So it's certainly possible that one of the ways that this increase in saving could have come about is through a reduction in men's kind of personal spending. We wouldn't see that here because we're only asking the woman about the money that she's spending or she observes in the household. In this context, women are responsible for most spending on household things, and the man generally only kind of spends on his own personal consumption. So we're not observing that component. It could have reduced. The other place is that technically, the point estimate on consumption is slightly negative, and the point estimate on income is slightly positive. So if you looked at the difference over 9 months, it is sufficient to explain the increase in saving. So we also can't rule out that just kind of through very small reductions in consumption that she could have saved the $15 basically.
And so when you said earlier that women contribute 1/3 of household income, but you're saying that that's 100% of household expenditure.
Almost 100%. It's not going to be 100%. The husband gives money to the woman for household expenditure, and then she's responsible for making it. But he chooses to not give some of his money to her, and he uses that for his personal consumption. And the woman would not have good visibility on that. So it's something we couldn't see without interviewing her husband, which we didn't do.
Then I wonder if a follow-up would be that if you thought that, a similar experiment on the husband's side of giving them mobile money payment services would change that, or if they are already able to hide money better.
I think they're already able to hide money better. So, I don't think that would necessarily change things. So, yeah, couldn't pull that out.
There's a question from the Zoom that I wanted to read out. So it says, hello, this is, I'm sorry, it's the wrong pronunciation, Lee from the School of Nursing. I also do research on microfinance, women's empowerment, and health. I'd like to know about women's marital statuses and how they were accounted for in measuring empowerment. As you're explaining women's empowerment, it often assumes that women are married. However, a lot of women I work with in Uganda are widows and single or never married. When we use the empowerment tool, they seem empowered since they're the sole decision makers within the household, but they actually face a lot more challenges and discrimination within the microfinance groups.
Yes, good question. So 70% of these women are married. And technically these questions about expenditure shares and decision making, were asked of all the women, including unmarried ones. But if you restrict the sample just to the married women, it's really the married women who are driving all the results. We see basically the same result coming out. The last thing I wanted to say on empowerment just quickly is that we see that women who were least empowered at baseline sort of gain the most from this treatment. So when we look at heterogeneity by empowerment at baseline, it's women who were less empowered who see the increase in their empowerment from treatment, and women who were more empowered at baseline don't see any effect of treatment. So it's kind of consistent with this empowerment mechanism. I'll just go over these kind of quickly because I know I'm almost out of time. One thing we found quite interesting is that we see an increase in saving on mobile money of kind of $15. And we actually see that total savings that the woman reports across all forms increase marginally significantly by $65. So we think this could be indicative of kind of a saving crowd in. And I'd be curious if anyone has any thoughts on that as well. There are no changes in the woman's business outcomes. It's consistent with no changes in sort of household income or consumption. Here we're just showing you the woman's profit by month in the control and treatment group are basically exactly the same. We don't see any changes in loan outcomes. This was really important to the microfinance organization. We knew that there wasn't a deterioration in loan repayment. We don't see any changes in sort of amount overdue. If anything, treated women are slightly less likely to be late with a loan repayment. No change in default, and treated women are as likely to have left the microfinance group, of which about 40% had by the N-line survey. We see this increase in social cohesion in the treated groups, which is driven by women saying they're more likely to talk at least once a week with members of the microfinance groups, more likely to discuss the business and to have a close friend in the microfinance group. We think this is partly coming from a reduction in the group meeting time of kind of 10 minutes, but also, again, kind of from observation and the focus groups. In these meetings, in the status quo, when you're repaying as cash, everyone makes their repayment as cash, and everyone has to count everyone else's cash repayment. So you can imagine how tedious this is, because you've got like 25 women paying cash in low denomination notes, and everybody's counting it. It takes a really long time. These meetings take sort of 2 hours on average. Women are coming at different points. It just takes a really, really long time. So again, anecdotally, the meeting just flowed a lot better when people made their payments of mobile money in advance, and there was more space to actually discuss things that were meaningful to the women. Slightly concerningly, we do see that treated women would prefer to shift to fortnightly meetings instead of weekly meetings. They actually like to model where they make their repayments every week with mobile money, but they just meet every other week to then write more discuss their businesses. That would be interesting. It's something we initially wanted to study. Might have a group that met less frequently in the study, but Barack, our partner, was not willing to change the meeting frequency. So I don't know how in the longer term there might be a conflict there between sort of women wanting to meet less frequently and Barack wanting them to stick with the weekly meetings. We try to rule out a lot of alternatives that I don't really have time to go into now. So just to conclude, we show that inducing women to use mobile money for their loan repayments results in them starting to use mobile money services a lot more intensely and frequently for higher values. Women save more with mobile money. Because of this, we think women's financial control increases, and that drives improvements in their household decision making and shifts expenditures to be more aligned with their preferences. We don't see any sort of negative backlash effects coming from this. So we argue that shifting from kind of the norm of just making payments as cash towards using digital financial services could have large benefits for women. Thank you very much.
All right, we have some time for Q&A.
So I'm kind of curious. I feel like when I have like access to like my like spending habits, I like know a little bit more like precisely like how much I'm spending. So I was thinking like, do you think like maybe over with the treatment group, their like measurement error like kind of falls, where they know how much they're tracking and how that might like relate to some of these effects? Like, is it that I have a better idea how much I'm spending versus like saving more or something like that?
Yeah, I mean, it's definitely possible that, they just can kind of see more clearly what their savings looks like, and that's kind of helping them achieve their saving goals. I think in this case, while we do see an increased likelihood that women accept digital payments with mobile money, digital payments are still a really tiny share of these women's business transactions, so less than 1% of their sales in the treatment group are digital. So I don't think it can really be the transaction, but it could make their savings more sort of salient to them compared to cash. Yeah. Yeah.
One of the results was that women are talking more about their income with their husbands. So like, it seems like it's not the privacy mechanism that's accounting for this. Would that be a fair interpretation?
I think it could definitely be privacy over their savings, even if they're kind of more willing to potentially discuss their income with their husbands. I think there definitely is a world where when you just have more control, that you have a larger pot of money that kind of you just decide what to do with, you're a bit more transparent with sort of the rest of your income, and I think that's what we think is going on here. And we also saw that coming out. Partly the reason we constructed the index of financial control to kind of have discussing your income with your spouse positively coded in the index, which we pre-specified it like that, is because at baseline we saw that willingness to discuss your income with your spouse was positively related to kind of other measures of women's financial control. Yes?
Just like zooming out, I wonder how you see the primary contribution of the paper. Is it a policy, like an intervention paper? Is it primarily about theories we have for understanding household decision making? Is it primarily about development economics? Like going beyond the empirics a little bit. What do you think?
Well, I would say the contribution is really understanding how women's financial control actually feeds through into their empowerment. And I think the story that we argue is that you're allowing women through financial control to just have decision-making power over a portion of spending that previously they had to kind of bargain over with their husbands. So I think that's what we would argue is the sort of primary contribution, but it also has these secondary ones of kind of, it would be great if more microfinance organizations went to digital payments. It's something they can and could do for a long time, and they're very, very slow to kind of often change. Their payment patterns, I think Barack, the partner I work with here, is an exception in that regard. But trying to give a bit more momentum to microfinance organizations.
Yeah, I was just thinking about the kind of different findings in the US context that when couples divide their income into different accounts, it's the benefit men because men make more money themselves, so they end up controlling more than they would in this pool and everything. And so I just wondered kind of what you thought the contextual.
Well, but I think here you're in a situation where the man is already making more money than the woman. He's already kind of keeping whatever he wants to keep aside, and he's choosing how much to give her to then spend on the rest of the household. So any way that you can kind of give the woman then more autonomy over a portion of the income and to decide what is used is actually improving the situation, which is quite different to the US context described. Yes.
Have you thought that there might be, or you thought about this, that there's some connection between the group cohesion outcomes and empowerment? Like, is there any way to test that empirically?
Yeah, no, that's I think I kind of skipped over it slightly, but on the alternative explanation, we acknowledge social cohesion could be an alternative explanation for why women's empowerment increases. We think this is unlikely to be the entire explanation for two reasons. Firstly, it's not clear why social cohesion increases financial control, like that doesn't seem to have kind of a clear link there. And secondly, we see this large heterogeneity by sort of baseline empowerment, but we don't see any heterogeneity by social cohesion, which again kind of suggests social cohesion is not the main mechanism, but we can't completely exclude it because other studies have shown that social cohesion, is a determinant of women's empowerment as well. Yes.
For your decision-making measures like the household and business decision-making, I was just wondering, what was like the highest level of the decision-making? Was it just self, or could you see in certain context if it was like a joint decision, it being like the highest?
So for household, it was self or joint with anyone, and for business, it was self, because these are supposed to be like a woman's own business.
We've reached time, and I know a lot of you have to run, so I'm going to close down the formal part of the presentation, and I'm sure you can reach out and talk to Emma for a few minutes after if you have any questions. But have an awesome spring! Yay, end of semester! Hope we see you in summer.
Thank you.